Hey everyone, welcome back. Today we're looking at my portfolio. It's just a quick look to take a look at how I created a portfolio that generated 158%. That's in return since last year, December the 1st, 2022. It's been quite extraordinary. I want to talk about some of the shares that I've invested in. One of the prominent stocks that I've invested in is Riot Platform. This is a crypto mining company. They're a tech company of sorts. And this is not my first investment I've made in this company. I've made other investments in this company and I've made huge amounts of profits on it before. So within the last year, I've actually sold Riot and I've actually bought again. The reason I sold is because it was doing extraordinarily well, as well as $20 per share. So I sold and I watched the market fell. I watched the share price fall down to around $8, $8.88, $9. That's when I knew it was perfect time to rebuy into Riot. And so I did, and it's risen to around $13 per share, and now I'm back up 43%. This is all within the last year as well. I've bought this company at higher prices, but what I did was pretty smart. I started buying this company in just around 2020, I believe. Prices were as high as $15 per share. But the most important thing that I did, I waited until the prices were as cheap as possible, like $5 per share, $3 per share, $3.78, and I bought even more. I filled up my accounts with even more shares. So I always like to buy like one or two shares when the prices are high. I buy a few shares when the prices are high. And as the price goes down, I buy more shares. And this is what I did. But I did sell around $20 and I bought it once again around $8, $9. So that was a great strategic investment for me. And it's done really great for my portfolio in terms of returns. Another company is Marathon. I used to buy into Marathon as well. They virtually do the same thing. They're a tech company, but they invest in mining Bitcoin. So it moves with Bitcoin. And virtually, it's almost the same as Riot blockchain. Virtually the same, to be honest, in terms of valuation, in terms of the performance of the stock. You can see it's very similar in terms of the charts. But once again, everything that I was doing with Riot, I was doing with Marathon. I was mirroring everything that I was doing. And I sold around $18 per share, $17 per share. But I didn't buy again. For this time, I wanted to look at other Bitcoin mining companies that I could invest in. So I decided, you know what, I'm going to leave Marathon for a moment and I'm going to invest in another company that mines Bitcoin. And thankfully, someone on this channel recommended CleanSpark. I've never heard of CleanSpark, but someone in the comments recommended CleanSpark. I checked them out immediately. I was like, wow, they're significantly undervalued. And around the same time that Riot and Marathon was doing well, they were also doing well, but their share price sort of fell by a huge amount after that. So it was a good time to buy. So I took the opportunity and buy. And since then, I'm up 78%. I'm really just studying the market. And this is why I always say to people, sometimes I just buy one share. Sometimes I just buy 5 shares, 10 shares. And as the market falls, I buy more. And that's a strategic investment decision that I've made. Another one that I've made that decision with is Watches of Switzerland. I'm starting to like timepieces, and I'm starting to notice that timepieces are a huge edge against the global market. It's one of the things throughout history, like real estate, that have always done well. And in the last couple of years, the luxury timepiece market have been doing extraordinarily well. And you can see the highest point for Watches of Switzerland was in December 2021. Pandemic prices were around $2 or £2 actually, two pounds. So that's quite interesting. So looking at how well it's performed over time, I knew that this company would be, and looking at their revenue, looking at how successful they are, I was like, yes, this is one of those companies that I want to invest my money into, that I never want to sell. So I bought very few shares. I only bought 6. And to be honest, I do want to buy more because it is still undervalued in my opinion. I'd value this company reasonable, around 10 pounds per share. Right now it's £6.60 per share. So in my opinion, it is still undervalued. Plus the luxury timepieces market is not really slowing down. Not majorly. If it does slow down, then I consider that to be a good thing. But you can see the opportunity in the last year. It's been a great opportunity for me to buy into this company around £5 per share, less than £5 per share sometimes. And I've made a significant investment in terms of return, almost 14%, 13.90%. That's incredible. And that's all within the last year. And I didn't buy all my shares at the cheapest price. I started buying shares probably around £8 per share, maybe £9 per share. I might have bought just one. And as the price fall down even more, I bought more shares until I had around 6 shares. Really and truly, what I'm doing is that, of course, I don't have hundreds of thousands of dollars to invest in the market, but what I do have is £100, £200, £300, and that's what I use to just play around in the market and just study the market. It is significantly paid off. So this is since I've been investing. Since I've been investing in this account, I'm up £265 in this account since I've been investing in all times. In the last day price, last Friday, the market was doing extraordinarily well for me. Clean Spark 22%, Riot 9%, 3.4%. Blink Charging is a sleeping giant. The recent news about Blink Charging, that the earnings report that it's done extremely well. Since then, I've made a significant gain, almost 20%, 19.51%. And this is not my first time buying Blink Charging. I've bought them before and I've bought them again because they were extremely undervalued. But you can see since the earning report have come in, the share price has immediately taken a U-turn. People start to realize that this company is actually improving in terms of profit year after year. So if we take a quick look at Blink Charging, you'll perhaps understand what I mean. Early this year, let's look at the quarterly results. First quarter results of this year were 21 million. Second quarter, 32 million. Third quarter, 43 million. So the fourth quarter of this year, we're looking at 55 million, 60 million. And once again, I do believe that the shares will outperform the market. As you can see, it's been doing great for my portfolio. So yeah, I've been doing well in terms of that. Rivian is a unique position because I like to buy Rivian extremely cheap. I always told myself the right price to buy Rivian was just around $10, $13, anywhere below $15. So yes, I've had instances of buying Rivian at extremely undervalued price, or extremely fair price, I should say. Buying good companies at fair price. And so recently I wanted to get into the lithium companies, because lithium is becoming such an important part of the economy for building of EV cars. So I do like EV charging companies, but also lithium mining companies are a big thing for me. So I took my first opportunity and bought into Lithium America. And I'm thankful to say it's been performing just how I needed to perform just so far, because so far I'm almost down 11%. So this is good. So what I did once again was I bought very few shares, just around 5 shares. That minimizes my losses. So I'm able to study the company more. And, if my confidence grows in this company, if I think that it will do well in the future, I can always invest more. But what's really unique is the prices that I'm getting at the moment. Right now, the prices of this company, it's basically it's like almost pandemic prices. Because pandemic times was really bad for the global economy, for some companies, not for all. But I like getting pandemic prices with companies like these. And I like investing in companies, then the price goes down, then I buy more. In fact, I did the same thing with Watches of Switzerland. When I bought into Watches of Switzerland, when I first bought into Watches of Switzerland, it was actually going up somewhat, or the price was still somewhat higher than it is right now. But then it fell down by a lot to around £5, and that's when I bought even more. But I bought more because I was sure that this company will continue to do well in the future. So if we're looking at Watches of Switzerland, in terms of revenue, let's just take a look at it. Of course, it's been in a very interesting position for the last couple of years. These are some of the revenue results. As you can see, it's been sustaining anywhere from above like 380 million for the last year consistently. That's been impressive. So yes, it's been consistently growing, to be honest. So I like companies like this because if you look at the 2020 prices compared to what it's doing right now, 2020 it was doing 190, 200, 207, consistently. But now it's almost doubled that. So you're not trying to tell me that if we check on the 2020 prices, it makes sense for what it's doing right now, because the 2020 prices is basically doubled the 2020 prices right now. So when I bought just around $5, some shares around $5, it was actually a good decision to make because this company it will grow to be doing 500 million, 600 million. The share price will grow considerably, and I do believe that the share price can grow back to £10 to £15. So I'm looking forward to that. So I do invest in EV charging companies as well, such as Blink, EVgo. EVgo has done a small amount of recovering, and thankfully I bought extremely cheap. I bought around 5 shares. I've bought before and I've sold in the last year, but I've rebought. And that was a good decision to make because I bought this share just around $2.07, around $2.20, $2.30. So it was a really good decision to make because I've made 25% on that. So I've waited for the dip in the market and I bought at strategic times. One of my proudest investments is Rolls-Royce, of course. My Rolls-Royce right now, shares are up 37%. Rolls-Royce has been doing incredibly well lately. It's been recovering incredibly well, and I'm really glad to see that because 2020 prices were really bad for this company. But just imagine if you'd invested in 2020 prices. And to be honest, if I look at Rolls-Royce PLC, you can see the revenue. Let's take a look at the revenue growth. The revenue growth have been absolutely insane since 2020. Since 2020, this company has been really killing it. 2019 it was just around 4 billion, and these were quarterly results, by the way. Now in 2020 to 2022, it's been consistently above 5 billion, sometimes even above 6 billion in revenue. That's quarterly, by the way. So that's significantly impressive, and I believe that it will continue this growth. I do not believe that this growth is just a mistake. This growth was strategic. This growth was smart. This growth was planned. This growth can continue in this company because of what they're building. Because this is Rolls-Royce Holding. So what they do is actually they design more hardware. So things like jet engines, airplane engines, that's what they've been doing. And you can see the prices have just grown substantially throughout this year. So that's one of my proudest investment because I saw this quite earlier on that Rolls-Royce was slowly but surely recovering, especially since last year, October. It started recover. It's been on a monstrous growth. It's been absolutely incredible. Recently, I bought into BAE. It says it's a British multinational arms, security, and aerospace company. So that's one of the reasons I bought in this company because I saw a great opportunity. It's been on a monstrous growth as well. It's been growing rapidly since like late 2020. It's been growing rapidly. And I do believe that the growth can be sustained. So I'm going to continue to keep an eye on this company because I think it has great upsides, to be honest. But what I'm also proud of is that this company, the share price has fallen like 4% since I've bought. So if I can get it to fall to 10%, that'd be a great time to buy once again because that's a 10% discount. I'm also looking at companies like Lithium Standard. It's fallen 26%. I'm really happy with this one. This is doing exactly what I needed to do, is to continue to fall. So I want to continue to watch this company and to keep an eye on its earnings to see if they will continue climbing and to take a look at the leadership as well. Because for a company to fall 26% in such a short period, it is somewhat of a concern. And that's why I invest such a small amount that you're able to lose. Just in case you lose it, you don't really mind. But at the same time, I can also have a look at this company to see what's the upsides. Does it have any upsides? And to really take a look at if it could be acquired by another company, might be in a great position. Another company I'm looking at is Bloomsbury. And I bought this recently, so this hasn't made much impact on my my portfolio. In fact, it's made no impact on my portfolio, so I'm thankful for that. But I bought it for like a month now. And the reason I bought it is because it's consistently been growing. It's consistently growing. Look at the pandemic prices. And it did have a fall off. Just before the pandemic, it started falling off in 2020, all throughout 2020, in fact. But late 2020, it started rising again, just above £2.55. And since then, it's risen as high as £4.86. So that is significant growth, and I can think that it would continue to grow. Recently, I also bought Lucid, but it hasn't made much of an impact on my shares because I've only bought one, and I bought quite recent. But I only bought one just to keep an eye on it. I just want to keep a closer look at this company, and especially with the new release of their SUV. But what I have bought Tesla. I bought Tesla within the last year. I bought Tesla twice actually, and I've made profits twice. But I always buy Tesla when they're incredibly cheap, like when the Tesla share was just around 108. And that was quite significant for me because I made a huge amount of profit on that share, on that decision. Of course, I didn't keep the company because I had a huge position in a lot of companies and I just sold out of many of them. But the most important thing is that you know when to buy, and I knew when to buy. It's not financial advice, it's just my opinion, but just stating the obvious. I did buy other companies as well. Within the last year, I've also bought Apple. I didn't necessarily buy Apple at the best time. I bought Apple just around $174. So around the dips, just around August time. I think I might have bought a little bit before as well in early May, but I didn't buy a lot. But those are companies that I've also made profit on. Nvidia is another company that I bought in, but I bought the dipped quite recently as well. But I sold quite soon after. But I did buy a few of the dips, and I sold just around the price when it was getting close to $500. Now, Intuit is another company that I bought recently as well. And I did buy the dip a couple of times and I just sold as soon as the price was getting closer. But I didn't buy a lot. I bought small percentage in these companies, small percent. And when I say small, I mean incredibly small, like £5, £10. I didn't buy a lot because I just wanted to see the percentage. I just wanted an opportunity to pay more attention to these companies. Without doubt, companies like Intuit, Nvidia, Apple, Tesla, I want to buy way more in these companies, significantly more in these companies. The PE ratio is incredibly high in some of these companies, so you also have to keep that in mind. You can see the PE ratio in Apple is like 30, 31, but in other companies like Intuit, Tesla, Nvidia, PE ratio is a lot higher. Now, there are a few other companies that I bought into as well and I've sold, but that's probably for another story for another time. But it's very interesting looking back to see how well the portfolio has done because I just bought at the right time, just at the right percentage. I bought the dips at the right time. But that's it for this video. Thank you for watching, subscribe, and I'll see you in the next one. Peace.